Welcome to Taking Stock. I'm Amanda Lang. Coming up, a special look at tourism in Canada, including a rebound that isn't quite robust enough, and the cost of air travel. Is it coming back to Earth? Plus, encouraging travel might take some innovative thinking. That's all ahead. First, a snapshot of tourism in Canada by the numbers. Tourism is big business in this country, worth $23.7 billion in the first 3 months of 2024. That's equal to 1.6% of Canada's GDP. It employs almost 2 million Canadians. Tourism was also the second fastest growing sector in first quarter after agriculture and forestry, with growth of 1.8% from more than 200,000 businesses. Overall tourism activity in Canada is still below pre-pandemic levels at 93.3% of the levels back in 2019. Meanwhile, inflation took its toll on travelers too. The price tag for airfares, restaurants, and hotels was up 19% between 2019 and 2023. The bulk of Canadian tourism is by other Canadians. Almost $18 billion of the total $24 billion spent was domestic travel. Part of the weakness in recovery comes as Canadians look to the U.S. and Europe for travel. With 12% fewer overall international visitors, there's a noticeable drop in visits from East Asia. Travel spending from China, Japan, and Korea are still down 30 to 50% in 2023. But rising population in Canada, up 9% between 2019 and 2023, may spur demand for new domestic tourism, while falling interest rates eases the pressure on consumers, making the picture for tourism next year brighter. Well, given how big a sector travel and tourism is, its overall health is pretty important to the Canadian economy. Claire Fan is an economist with RBC. Claire, thanks for being with us.
Thanks for having me.
And you folks recently did a report, a kind of a survey of the state of the industry. And what I took away from that is that it's pretty good, but we're not all the way there yet. We're certainly not back to 2019 levels. How would you characterize what you're seeing in terms of the health of travel and tourism in Canada?
Yeah, that's exactly right. So in our report, we kind of tried to really look at the overall health and condition of the tourism sector through sort of two separate lenses. So one is to look at, just how broader demand among Canadian households, how that's been sort of rebounding or catching up to where they were pre-pandemic. And over there, we're seeing a lot of really good signs. So obviously, Canadian households during sort of the most part over the past couple of years, likely due to restrictions that were put in place at the time. So we've done a lot of sort of traveling within Canada. So that's sort of the area that we've seen demand bounce back the most sort of rapidly over 2020 or after 2020. And since then, we did see this very interesting shift of demand, gradually with Canadian households venturing abroad to the United States. And by the end of 2023 was when we saw sort of the demand to overseas travel. So that counts just travel demand outside of Canada as well as the United States. So those sort of travel demand really bounced back more fully as well by the end of last year. Mm-hmm. So again, really good signs, but then sort of switching the lens to look at inbound travel demand. So how many foreign visitors at a time are coming to Canada for Canadian tourism? And that's where we are still seeing a gap. So in terms of the number of foreign visitors, we're seeing just north of 10% of a shortfall relative to where we were in pre-pandemic 2019.
And of course, we should make a distinction maybe between sort of the dollar figures that we're seeing and the volume, because we have had inflationary pressure. So you might see revenue look like something's very healthy. But we know, Claire, from talking to restaurants, for instance, that they're just not feeling the volume of customer business that they saw pre-pandemic. Is that part of is inflation kind of masking weakness here?
By our count, travel-related sort of expenses have seen a very hefty increase in terms of sort of the inflation gain over the past 4 years. So from 2019 to 2023, I think we counted somewhere around a 20% increase in prices related. And of those price increase, maybe around 19%. 12% of those, or the majority of the price increase, actually happened in 2022. So this is where, looking forward, we do think there are still reasons to be a bit more optimistic when it comes to travel demand. Obviously, travel being a huge discretionary category, meaning households when facing these days, obviously a lot of challenges with high inflation, not only within travel, but something, like food, very basic, and gas prices have all increased tremendously over the past year. So travel is one category that you would expect households to sort of cut back a little bit when they're facing these challenges. And that's sort of exactly what we've seen. But then again, that leads into what we're expecting for the future, which is essentially, a lot of sort of the surge where the bulk of increase in travel prices actually happened in 2022. In 2023, travel prices increased by a much smaller 4%. And in 2024, what we're seeing is actually outright declines in some of the travel-related categories, including airfares. And that's true for both Canada as well as the United States.
And so that's the good news, right? We might see a bit of easing of the price pressures. We did see this big drop-off in international travel. And some categories, East Asia, for instance, as you note in your report, quite dramatic, right? 30 to 50% declines. That could well just be similarly, a traveler faced with inflation in their home market is pinching pennies. So we may be. But are there any other trends you see that we should worry ourselves about that we might need to address to get that international traveler back to our market?
Yeah, for sure. I mean, relatively price growth where inflation trends is definitely one of the concerns, and that's constraining pretty much consumers everywhere. But the reason, comparatively, demand out of East Asia is a lot weaker might be due to just, some categories, especially airfare. There's a lot of sort of rerouting, obviously, just due to the geopolitical concerns these days, especially with the Russian invasion into Ukraine. There's a lot of sort of rerouting around Russian airspace, and that caused not only sort of longer air travel time, but also a surge in costs for airfare, specifically through sort of that route. So that's all, potentially could be influencing demand, especially out of East Asia for longer distance travel.
We got to leave it there, Claire. Great to have you with us for this.
Thanks, Amanda.
Claire Fan is an economist with RBC. Coming up, we may not be back to normal yet, but our airline prices at least coming back down to earth. Stay with us.